Hi there, and good evening. I'm Patrick Falk in Hong Kong. You're watching ViuTV News. Coming up on tonight's show, major shake-up at Cathay Pacific with some 600 staff sacked in the hope of making Hong Kong's flagship carrier profitable again. Deadly minibus crash on Shenzhen Bay Bridge kills 1 and injures 9. And the international community growing concerned as North Korea says its latest missile test confirms warhead guidance reliability. All right, we begin on the corporate front this evening. Cathay Pacific announced its biggest headcount reduction in almost 2 decades as part of a push to return the carrier to profitability. The cuts saw shares in the company soar by 2.3%. Ryan Brooks has more.
Hong Kong's flagship carrier Cathay Pacific announcing massive job cuts on Monday, with 600 staff at the head office to lose their jobs. It's the airline's biggest shakeup in almost 20 years as it looks to get back in the black. Cathay recently recorded its first annual loss in 8 years. The airline says no frontline employees, cabin crew, or pilots will be fired because it's still growing, but says staff in those positions will be asked to step up their productivity. A third of the cuts are management jobs, and there's more to come. It's just the first step in a 3-year reorganization plan. The airline's new CEO, Rupert Hogg, said the cuts were, quote, tough but necessary. Shares in the airline hit a 2-month high on the news.
All right, our business expert Joel Labi is with us for more on that story. Joel, we know a bit about the bad bets on fuel prices, but what are the other difficulties Cathay's faced?
Well, the other major problem is competition. I mean, as you would know, in this region, mainland China, some of the airlines, China Southern comes to mind, low-cost carriers that have really hit Cathay hard. I mean, we're talking lower ticket prices, more route availability, and more customers cashing in on those lower ticket prices. So Cathay has been losing a lot of its market share because of that. They've also been spending a ton of money to upgrade planes, and you look at their headcount, 34,000 people are employed by this airline, which dwarfs most of its competitors in this region. So Cathay, while it wants to be Hong Kong's flagship airline, has a very, very strong headwind that is flying into at the moment.
All right, well, cost cutting is a big part of what's needed to happen, but how far are these job cuts going to go exactly to make the airline profitable again?
Well, these are the biggest job cuts that we've seen at Cathay for 20 plus years, but this is part of the overall restructure that the bosses are calling it. This is going to take place over 3 years. We've seen, though, today's cuts only represent about 6% of the bottom line of staff costs. So they're not just going to be making money back off getting rid of staff. They're also going to be redeploying some sectors to, say, Cathay Dragon, its smaller operator. And also, above all else, they're still going to be in the red this year. So I think they're going to take stock at the end of the year and then go ahead from there.
All right, certainly a big shake-up, and investors certainly approving the move today. Anyway, thanks very much indeed for that, Joel. We'll be back with you a little bit later on for our business headlines. All right, starting next month, patients seeking treatment at emergency rooms at public hospitals will have to pay almost double the current amount. The fee will go from $100 to $180 starting from June 18th. Charges for general outpatient clinics will go up by $5 to $50. The cost for specialist outpatient clinics, the maintenance fee for acute care beds, and drug charges will also see a hike. These hikes are the first in 14 years. And to the latest on the spat between lawmakers and Chief Executive CY Leung over LegCo's UGL probe. Lawmaker Kenneth Leung has confirmed he will not quit the investigation panel. This as the chief executive continues to call for the accountancy sector rep to stand down from the select committee, saying it's a conflict of interest because of CY's defamation suit against him. Kenneth Leung is among 26 Pan Democrats who signed a letter today condemning CY Leung for interfering with LegCo affairs and misleading the public. They also plan to propose impeaching the outgoing leader.
We're putting the pressure back on him, that he should be forthright, he should be honest and coming to the select committee and answer all the questions and not change the subject of investigation to other people. He is the subject of the investigation.
And staying on local news, a minibus driver was killed in a deadly crash on the Shenzhen Bay Bridge this morning. The accident took place just before noon when the driver failed to hit the brakes and crashed into a roadworks truck in front. The number 618 minibus was heading towards Hong Kong's northwestern tip of Shenzhen Bay from Tin Shui Wai. The driver was trapped in the vehicle after the collision and confirmed dead after he was pulled out. 9 other passengers on the minibus were also injured. To news elsewhere now. North Korean state media said today that Pyongyang confirmed its warhead guidance is reliable after its latest missile test last night. It's a growing worry for the international community as South Korea's defense ministry says the North may have gathered meaningful data from the test. For more details, we go to Seoul correspondent Joseph Kim.
Just 1 week after successfully test firing a mid-long-range ballistic missile, North Korea shot another medium-range rocket against UN resolutions. This latest test, however, adds further speculations that Pyongyang is possibly getting closer to developing an intercontinental ballistic missile. The rocket flew 500 kilometers using a solid fuel engine, which makes it harder to detect, and it also means that they're improving their technology.
South Korean and U.S. intelligence authorities believe North Korea has secured meaningful data in enhancing the credibility of its missile technology. But further verification is needed to determine whether the North has mastered the re-entry technology for missile warheads.
The international community has once again condemned the move, including the United States and Japan, vowing to add more pressure to the isolated state. The United Nations Security Council will hold an emergency meeting to discuss the recent rocket launch this week. South Korean President Moon Jae-in has also ordered a firm response to the recent missile test, while his government is showing signs that they will continue to pursue diplomacy alongside sanctions. Still, according to North Korea's state media, Kim Jong-un has ordered mass production of the recent rocket, and though South Korea and the United States still believe Pyongyang is missing key technologies from producing an ICBM, with the current pace, it'll only be a matter of time.
Joseph Kim there in Seoul. Now, the Philippines is in damage control mode after President Rodrigo Duterte stirred things up at home last week when he said China's President Xi Jinping had threatened war over a dispute in the South China Sea. Eve Johnson reports.
Damage control in the Philippines on Monday after President Rodrigo Duterte rocked the boat last week, claiming that Chinese President Xi Jinping had threatened war if the Philippines goes ahead with plans to drill for oil in a part of the South China Sea claimed by both sides. The report sparking protests in front of the Chinese embassy in Manila and a bid by the foreign minister to try and smooth things over.
There was no language or even tone that would lead any of the two presidents to believe that there was disrespect for them or their country. It is but natural that when you talk about peace and when you talk about conflict, the word war may come up.
Last year, a court in The Hague ruled that the Philippines has a right to offshore oil and gas fields in its exclusive economic zone. Duterte has come under fire for not pushing China to comply with the ruling, some accusing him of selling out to Beijing. Duterte has won some notoriety for his unfiltered comments, last year telling former U.S. President Barack Obama to go to hell, and often leaving his cabinet to pick up the pieces.
All right, it's back over to Joel with more headlines from the world of business.
A bumper trading day for Hong Kong stocks hitting a 22-month high. Take a look at this. The Hang Seng Index gaining 0.9% to finish at 25,391. Investors were buoyant thanks to momentum from Wall Street, that continuing flow of money from mainland China and a spike in oil prices. Internet giant Tencent keeps going from strength to strength, with shares reaching a record high. And as mentioned, investors like the direction of Cathay Pacific's restructure, which started with today's 600 job cuts. The airline's shares jumping 2.3%. Now, from airlines to car makers, and a big change is coming at a very familiar brand. Ford will reportedly sack its chief executive as it tries to stop its share price tanking further. According to Forbes, directors have lost faith in Mark Fields and are quite alarmed by how quickly the car maker's business has deteriorated. Ford's stock price is down 40% since Fields took charge 3 years ago. James Hackett expected to be announced as the new CEO in the coming hours. The controversial Trans-Pacific Partnership trade deal will be revived, even though the US is abandoning it. The 11 remaining nations, including Japan, Australia and New Zealand, say they're committed to finding a way to make it work. They're also leaving the door open for the US to rejoin the pact at any time. You'll remember President Trump withdrew it as one of his first acts in office, while China is pushing its Asian trade agreements, which covers most of the region's economies. China is hitting sugar imports with even harsher penalties, and in some cases that means almost double the tax. These new measures will impact about a third of China's annual sugar imports, with a new levy of up to 95%. Beijing blames overseas shipments for seriously damaging the local industry. China is the world's top importer of lower-priced sweetener, and some experts feel this new tax hike just won't be enough to stem the flow. One of Britain's most vilified bankers will be hauled before a court to answer for his role in the financial crisis. Fred Goodwin was one of the bosses of the Royal Bank of Scotland, but